From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 22nd, 2016. In just a moment, we'll be taking a look at the USDJPY, the US dollar versus the Japanese yen, for today's trade analysis. But first, I want to recap one of the trade suggestions made over the past few days. Starting here on the USDCAD yesterday, we were looking for an opportunity to go long or buy this currency pair into the support zone. Well, as you can see yesterday, the market fell down into the yellow shaded area. We took an opportunity to go long at 127.80. Well, if we measure it from right around the 127.80 level, you can see that the market went up 40 to 45 pips of profit. So we were able to protect the trade, lock in with profit, close some profit if you desired to do that, as it was here sitting with 40, 45 pips of profit. If you didn't, the market came right back down and you're at break even. If you did, of course, moving stop losses to break even or better. We've seen the market take us out of the trade now and now looking for a new opportunity. For the day today, as long as this sits above this yellow shaded area, there's still the opportunity to go long here. What we'd actually like to see is a little bit of a fall in oil prices. Oil took a little bit of a turn back higher yesterday. So if we're going to look for the USCAD to go up, we typically would like to see oil prices take another fall or tumble. So that's what we'll be looking for. Watch oil. If it starts to take a tumble, we'll look for this to bounce off the yellow zone and start working its way back higher again. If oil continues to rise, as it has for the past few hours, then we look for the breakdown of 27.50 and a continuation lower here for the USCAD. So definitely keeping an eye on those oil prices to determine some fundamental direction here for the USCAD. Next, moving over to the USDJPY, US dollar versus Japanese yen. If I zoom out a little bit here on the daily time frame, you can see clearly we have been in a downtrend. Risk aversion in the market definitely gives this some downside expectation for the US yen. The Japanese yen being a safe haven currency that often sends this currency pair lower when there is risk in the market. And of course, yet tomorrow we need to be cautious because tomorrow we have the Brexit referendum, the vote whether the UK will stay with the EU or not, and we'll have to wait and see how that turns out. There could be increasing volatility over the next 24 hours as we go into that vote tomorrow. But risk aversion has sent this currency pair much, much lower, testing into multi-year lows all the way down here at the bottom of the chart. Over the past few days, we have been studying this little blue box down here at the bottom of the trend. We can see 1, 2, 3, 4 days now kind of stuck inside this little period of congestion, this blue box. If you're going to sell within a period of congestion and a downtrend, you would often sell at the top of the range or the top of the box or congestion. If you're also going to sell, you would look for the breakout below that congestion. So those are your opportunities. Sell at the top or sell underneath. If you're looking to buy or go long, well, of course, at this point, you would be buying against the trend because the trend has been down. You would wait for a break above the congestion zone, above, at least at this point, 105, to give you some upside expectation, or you would wait for it to go back down towards the bottom of the congestion. So those give us some parameters, some guidelines that we'll be looking for here on the US yen. Take it down to the 4-hour time frame, zoom out one time so you can see that entire box or congestion zone that we're at right now. Of course, the blue zone is the top. That's 104.80, 105.00. If you're going to go short, looking for a lower risk and higher reward opportunity, you would go short at the highest point of the congestion zone. That's the blue shaded area. Yesterday we discussed the potential risk, your stop loss, about where this red line is, somewhere up close to the 105.25, 105.30 level, somewhere up in there above the blue zone, because you know if it breaks above there, you don't want to stay in it too long. So if we're looking for a short, we need this to go up before it goes down. It needs to challenge the blue zone, 104.80, 105.00, before you would look to go short. You don't want to go short right now on top of the yellow zone because clearly over the past few days, or at least several hours, it's found support there. It doesn't mean you would automatically want to buy it. Remember, that's against the trend. So not necessarily looking to buy this, but we don't want to sell it at the yellow shaded area. So for the day today, let's look for it to head on back up towards 104.80, 105.00. Look for clues to resistance and reversal and give us an opportunity to go short. Maybe even looking for a red arrow with the Forex Black Book would be something to do if you have that indicator on your chart. But definitely up closer to the blue zone. That minimizes your risk. What do I mean by that? If your stop loss is above it, about where that red line is, the closer you can get, the smaller your stop loss will be for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.